Why do 90% of trade entries fail right before the market goes your way? It's not a bad luck, it's a trap. Let me teach you the entry strategy that actually catches the move. Let's get started. Most traders can identify the trend continuation correctly by following all the trend rules and filters. But the biggest problem becomes when it comes to the pullback area, when they need to identify where the trade entry is going to be. Many traders will see these pauses during the pullback and think that's the time I should enter the market. Then the market will go down and hit their stop loss. And when they see another pause, they will think maybe this time around it's the right time for me to look for a trade entry. And then the market will continue down and hit their stop loss. So basically they don't know alongside the trend where is the market gonna pause and turn around so that they can make money. So before I show you the trade entry techniques, I need to show you how to know when the market will pause, because that's the first puzzle piece that we need to find before we even talk about the techniques of entering a trade. So we need to understand exactly where the pullback will pause, and that's where you can look for the trade entries and all of that. So the best possible way that professional traders use to identify where the pullback will pause is by identifying a key level, but not the normal way. They use a specific filters to identify the key level, which I will show you in a second, because this particular key level here will actually fail. As you can see, the market will break through it. So there is a technique that we use to identify the correct place where the pullback will actually pause. Let me show you. So the first thing to do is to go down to a smaller time frame. For example, in this case, this is daily time frame. Then you have to go down to a smaller time frame, which is 1 hour time frame in this case. Then you'll notice that when we get to a smaller time frame, we can see a little bit of details that we don't see on a daily time frame. This is important because we're going to use this information to our advantage in a second. Another important thing is that on the daily time frame, you'll notice that there's a little bit of a pause in this area here, but it's very hard to see because you are on the time frame where the actual move was taking place. So if you go to a smaller time frame, then you'll see that that particular move happened around this area here. So that is our key level. But there's another way to confirm that this is a real key level, because we need to make sure that the key level that we're in is the real one, so that we can know exactly when this pullback stops, which is our biggest problem from the first place. And we can also go ahead and draw our key level this way for now, while noting that there are areas that are holding already, but still we need to confirm that this is the real key level, and let me show you how. The best way is by using volume indicator. So if you'll notice on this volume indicator around here, there is a moving average that tells you the average of the volume in that time period. And you'll notice that all these bars here are above the average. That means that there's a lot of activities that is happening within that swing of a trend that is going up. So as you will see that the tallest volume here is this particular candle, this tall candle here, then followed by the shorter volume, which is for this particular candlestick here. And the red two volumes here are for those two red candles right here. So that is an indication of a pause. Then right after, there is this strong volume right here for this particular candle, which erases whatever that was happening in this area. That is very, very powerful. And we want the volume of the candle that takes whatever the pause was in this area to have a higher volume that is just above the moving average. That means the volume is abnormal, then which gives us that pause that we see in this area. So that's what makes the key level hold so strong. So if you see a pause and the volume is within the EMA, this clouded area here, then you must know that that pause isn't gonna hold enough. That's why a lot of traders will attempt to place a trade here, then that trade won't work because it's not in the key level. The market will go and touch the key level first before it can resume. So this is exactly how you know where the pullback is gonna hold. And this is where now you can start looking for your trade setups. Now let's get to the entry techniques. So in order to identify the best entry technique is, first of all, be sure about the trend, which we already done. We have already identified the trend. So if you identify, for example, entry at this level, because your key level is not identified correctly, so the market will take you out while it's going down during the trend pullback. So that's why it's so important to make sure that the key level is identified correctly or with higher probability. Then let's move over to the trade entry techniques. So one thing you should notice when you get to the key level that is holding, you will see the tail of candles. Sometimes it's multiple tails, but you'll start seeing the tails at the bottom if it's an uptrend. Then once you see a couple of those tails, you must know that your key level is holding. Then that's where you can start looking for a signal. So there are a couple of signals that you can look for in this area. Some of them are the pin bar, which is my favorite because it shows that rejection that we spoke about with this tail or a wick. So it shows us that there's someone with a lot of money that is buying at this key level. That means the key level is holding. And another powerful signal is an engulfing signal. So an engulfing would be a smaller candle on the left, then on the right you'll have a candle that engulfs that whole particular candle, which will be on the right. So these two signals are my favorite, but there's many of the signal that you can use. In this case, it doesn't matter specifically which signal, as long as it's a signal that indicates that the market is trying to go bullish. So as you can see in this case, there is a pin bar signal that came in at this level in 1 hour time frame. So what you need to do now, you need to go to 15 minutes so that you can optimize the entry within that pin bar. So in 15 minutes, this is how this 1 hour candle looks like. So as you can see here, it opened right here and went all the way down and came back all the way up, which created that bullish pin bar candle. So in order to have a very small stop loss area while having a big take profit area, we need to squeeze our entries within the building blocks of this pin bar in 15 minutes so that we can make the most of it. And the best way to do that is to identify this particular key level right here on this building block of this pin bar candle in 15 minutes. So you will notice in this area here, there was a bit of a hold. So if you would go to a smaller time frame such as 5 minutes, you will notice that there is a massive key level around that area. So this is where our stop loss should go below. So our stop loss should be right here. And another thing that we'll notice that there will be another key level right here where the pin bar opened. Remember, the pin bar opened in this area and went down and closed at this level here. So this is where you should be targeting your entry here. This is the price level where you're gonna enter in. So this distance here is gonna be the stop loss. This is gonna be your entry here. Why your entry should be here, you might ask. So your entry should be here because almost always the pin bar will retest every time before going up. So you don't want to enter right here. That's too expensive if you enter there. So you want to wait for this kind of pullback of a pin bar that comes to the opening of that pin bar. Then you will enter this level. So your entry should be something like this here. Your stop loss right here and your profit area all the way to the next higher high. And this is how everything will look like when you go back to your 15 minutes. You will see that you have a tiny stop loss area, which gives you a huge profit potential. So basically, this is how you optimize this area in order to get the best of the entries. So it's a similar case for other candles as well. So within the building blocks of a candle, there's always some key levels there. So you use the first key level for your entry and the second for your stop loss. Then you put your stop loss order below it so that that level protects you. Check out this powerful video here to learn more.